Hi everyone, good morning and welcome to Infonox Market Insights with me, Richard Perry, analysing markets for Infonox on Friday the 4th of March. Now, it is Nonfarm Payrolls Day and maybe payrolls can have some sort of distractive element to what we are witnessing, obviously, with the Ukrainian invasion by Russia. The attack on a power plant overnight just shows the depths that the Russians are willing to go to in this situation, and it's pretty sobering reading. Markets reacted negatively overnight. There's been a degree of support coming in as apparently the attack has been quelled slightly and the fire that's been broken out is under control, but still the market sentiment remains negative and just continues this ongoing negative outlook that traders have, I think, with the fact that anything risk appetite orientated through European assets such as the euro, such as the DAX, are getting sold quite significantly. Now, in terms of payrolls, as I said, a distraction potentially for traders today. Expectation of 400,000. There was a strong ADP number and a big upward revision on Wednesday, but ADP is probably taken with a bit of pinch of salt. So how that reads through for payrolls today will be uncertain. But anything above, I think, 500,000 would certainly be dollar positive and continue the run high that the US dollar has been finding recently. Now, the charts I'm looking out for today, I'm looking at euro dollar on the continued break lower on euro. I'm also looking at the gold price, which continues to run higher. And I'm also looking at SP 500 futures, which for now are outperforming and holding up well, but it'll be interesting to see how long that lasts for. So I'll look at the charts now. So onto the Infonox MT5 platform, starting off with euro dollar. We can see that euro has been under pressure for the last 4 sessions, breaking below the key support of 11.20, and that essentially now ends what was a run of a trading range. And you can sort of measure the downside break of that trading range. You sort of project that. I mean, it's around about 300 to 375 pips of range, depending on how you measure it. So you project that lower. That takes you down into the around the 108 level on euro dollar. I'll put it on the weekly chart very quickly, and you can see that euro is at levels not seen since May 2020, and the 108 level is sort of the lows of that previous range really coming back into play. So it really does suggest a downside move on euro dollar. Selling into strength is the way to play euro dollar, but it's not really rallying, although it is slightly stretched to the downside. You'd say any unwinding move, that RSI on the 4-hour chart, anything towards probably 40, maybe 45 on a rebound. But are you getting rebounds at the moment? Not really. The 11.20 area is a key area of overhead supply now. Anything between sort of 10.60 to 11.20 sell zone, I'd say. Gold price continues to run higher. It's got this uptrend that we've been in since basically the end of January, so last sort of 3-4 weeks of uptrend continues, and it's running higher lows in a succession of sessions now. Breaking out, yes, this morning, slightly breaking out above 1950, trying to test that move, which would open then 1974, but it continues to run higher, and you'd say any sort of unwinding move back towards this uptrend is key. Is support area for a buying opportunity. Key support comes in around 1877, 1886 area, but certainly buying into weakness on gold still. And the S&P 500 futures, well, initially overnight, I'll put it on the hourly chart, you had sort of this big lurch to the downside. It's recovered actually since then as the sort of fire situation at the nuclear plant has come under control. But certainly you'd say, interestingly enough, this market has been ranging. European indices, the DAX, FTSE, are all sort of sharply lower. S&P futures holding up well. I wrote a report on the website saying that I think Wall Street is going to continue to outperform certainly the European markets. And this range that we've seen S&P 500 futures in the last sort of week or so really just shows that. I mean, it's volatile, yes, and it's in a range and it's chopping around, but still it is holding up well. And there is the potential, I suppose, for a recovery, but that downtrend is still in place. The resistance overhead comes in around that 4,400 area, 4,420. So you'd say holding up rather than recovering, but yeah, the negative configuration on the momentum suggests downside pressure on the support of 42.50, 42.75, but for now holding up. Thanks for watching, everyone. I hope you found that informative for your trading. I will be back on Monday for more market insights and looking ahead to the new trading week. So I wish you good luck in the non-farm payrolls trading, and I'll leave you with the Infonox support and resistance table, and I will speak to you soon. Thank you.